This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Friday morning. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Good morning.
Coming out of a holiday, going into a holiday. Can't complain.
It's the best feeling, right?
Can't get better than this, right? 18 days and you have 10 sessions where the markets will be shut. So you're working only for 8 days from yesterday, I'm calculating, till April 16th. Good data point, right?
Yeah, absolutely, Nigel. The best, right?
And today's the IPL.
But we should
as
keep
well.
these holiday data points under the radar, you know?
Someone asked me on Twitter the other day that you guys celebrate holidays so much. Do you even love your job? I said you can love your job and celebrate holidays at the same time, right?
Absolutely.
All right. Well, the markets are looking a little calmer, right? I mean, I think that is the key takeaway from the last 2 weeks. And that's good news. I mean, we're ending this week in a much better fashion. Sentiment is on the mend. There is no big news flow. And the point is, when there is no big news flow, it's good news. No news, at least no major news, is good news. That's the way to look at the markets out there. So, you know, since we were off yesterday, we got 2 days of data points to react to, and it'll come up on your screen, the change. The S&P and the NASDAQ. The S&P is up almost 2%. The NASDAQ is up a little over 2.5%. So we'll react to this morning as we start. Global sentiment, as I said, is a little better because of nothing new in terms of banks, etc. No new crisis to resolve, etc. I mean, at the margin, there is this news of the FDIC how they saved SVB and the fallout, and maybe banks in the US will have to take a bit of earnings hit, and we can talk more about that later, but nothing large, no major news flow. What is also reassuring, and I think today we will markets will pay more and more attention, Europe onwards, to this data point which came yesterday. The latest weekly data point from the Fed's balance sheet and money market data indicates that things are again on the mend. I mean, so what does this mean? This basically means that number one, the borrowing from the Fed, banks borrowing from the Fed, both from the new facility and the discount window, is at elevated levels, but it is not rising. So that is one. And the money market data is basically money moving out of everything else into the highest rated, most secure government bond funds, money market funds, etc. That outflow is still there. Money market funds AUM is at the highest ever. But again, it's not accelerating like it was over the last 2 weeks. That would have showed risk aversion. So again, these two data points are also incrementally a little positive. In the near term, coming to the market here, on Wednesday, we finally got a decent rally, which stuck all the way till 3:30, did not get sold into. And I think we got a fairly decent tailwind of 2 days worth of rally in the US, up move in the US, not a big rally, but a decent 2% kind of move. So the near-term resistance, the levels remain the same. The average has changed. 17,207 is the first one. It's about a little over 100 points away from where we left off. And the 20-day now stands at 17,219. So that 17,220 kind of level, I think, is the hurdle to cross. It's the short-term kind of reversal, risk reversal to cross. On the way down, low of 16,913, which is the low from day before yesterday. That the day before yesterday, 2 days back, the trading session 2 days back, that is the low, 16,913. It's an important level to defend on the downside. Again, very near-term levels here. Bank Nifty on Wednesday tested the 20-day moving average, but we did not close above it. So the 20-day becomes the near-term resistance. That's 40,047. And then you get to the swing high of 40,201. So again, on the upside on the Bank Nifty, on the downside, 39,273 is the level to kind of defend. These are all within 2%, 2.5%, 3% kind of levels, but that's near-term for you. Now, mid-caps and small-caps are the other part of the market which did very well. I mean, they rallied, and decent rallies after almost 9 and 7% cuts on the small and the mid-cap part of the market in the last 15 sessions. And we had 1.5–1.75% kind of rallies. And for both, I looked at the small-cap and the mid-cap index. The 20-day moving average is very close by. They're just 1 to 3% away. For the small-cap index, the 20-day is 3% away. The mid-cap index is about 1% away. Crossing this level again in the very near term adds to the confidence that perhaps there is more to go. But the important thing once you cross it is to stay above it and not fall under it, as has happened for the mid and small cap indices fairly recently. Sonia.
Oh, absolutely. And there's so much to watch next week, right? There are many big triggers for the market. So ahead of that, it's good to see that the bulls are making a slow comeback. And today, this morning, the SGX Nifty adjusted for the close yesterday, is up almost about 30 odd points. So the indications are that the start will be in the green by 30 points, and then we'll take it from there. The foreign investors have made a comeback as well. It's been 2 days now of buying that we've seen from FIIs. So yesterday, FIIs bought to the tune of about 1,250 odd crores, on Wednesday, I mean. And, Wall Street has shown some amount of resilience. I think the banking concerns have eased a bit. So across the US, across the European markets, there's a lot of green that we've seen. Brent crude is also back above, almost above $79 a barrel. Some demand has come back there. So global cues have stabilized. Now, for our own markets, we're holding on to the 24th March low. So the March lows of 16,930 seems to be a bit of a line in the sand for now. And as I said, there are many big triggers to watch out for. You have the auto sales that come out tomorrow on the 1st of the month, and it's not going to look like a good picture this time around. The footfalls have slowed down sharply in some of the sectors like passenger vehicles. Two-wheelers, there's no major recovery that's seen just yet. At least that's what channel checks and dealer checks indicate. So you could get a bit of ugly news coming in from there. Apart from that, next week is the RBI meeting on the 6th of April, and there's an expectation of a 25 basis points rate hike that could come through. So that will be in focus. There's also the earnings season that begins on the 12th and 13th of April. So you have Infosys, HCL Tech, ICICI Bank, all the large caps coming out with numbers in the next fortnight. So I'm going to watch all of that very closely. Also this morning, there's a very interesting note from Jonathan Garner of Morgan Stanley where they've upgraded India. We'll talk about that in greater detail. But the main premise on which they've upgraded India is they've said that the valuations are now looking attractive. The valuation multiples have narrowed. The premium has narrowed. So now they feel like this is a good time. And given that India was so resilient in this entire SVB issue, they are quite confident that things would look up. So I guess today you're wearing the right color for sure.
I hope I'm wearing the right. If it has some kind of rub-off, then great news, Sonia. But it was good to see the last day of the March series. Well, the bulls fought back and they didn't go down without a fight. They put in a fight, they went down. The series went to the bears because we ended with a cut-off closure around 2% odd. The biggest positive, though, was the performance of the broader markets after the recent weakness. And now we are starting a new series. And the FIs, well, they're the most aggressive net short at the start of the series from whenever I can remember. So we'll get to that in just a bit. For the time being, though, we're talking about records at the start of this month. That's March. And maybe, in fact, we won't see the fourth straight month where the Nifty ends in the negative. Well, that's happened. So records are meant to be broken. And for the first time in 20 years, we have the fourth negative month, unless today we rally 2%, which is unlikely to be the case. The last time we saw this was in 2001. And, in those 4 months, that's between June to September, the Nifty that time corrected more than 20% on a base of 1,100. So this time around, we've got away with a 9% cut. Well, it's not as bad as what we thought last time around. Now, the FI short positioning. Shorts are at around 91%, which is very, very aggressive on the short side. And just put up a reference point at the start of the previous series. Well, they were between 70 to around 80% odd. So now they're aggressively net short. I'll tell you what, if you get any kind of good news, you'll be actually thanking your stars that there are shorts in the system because they'll be forced to cover out. But let's see how that plays out. On the option side, 17,000 put and call, both of them very, very active. So it gives you a broad range, a 400-point range that you're looking at. Recent low becomes a support. The 20 DMA on the Nifty becomes a bit of a resistance, 17,220 odd. But what's clear is if you get the Nifty closer to around 16,900 odd, then risk reward favors you. And that's evidence. Just look at it. The last few sessions, if you got in out there, you've made some money out there. And the odds would be that 16,830 to around 16,850 does hold out. SGX Nifty is suggesting adjusted that you'll be up close to around 30 points to kickstart trade. Need to build onto that. And for the Nifty Bank, we're very, very, we're at a very important mark, the 20 and the 200 DMA. You like it to break those levels decisively to give you a further trend. We had a bit of relief rally before we went into that holiday. So that's good news. But for me, the biggest point will be, was that a flash in the pan with regard to the broader market performance after the kind of selling? Or can we see more in terms of broader market buying? Over the next few days, I think it will tilt towards more buying in the broader markets. Valuations as well have become very attractive in select pockets. So let's see how this plays out.
All right, Nigel, thanks very much for that. But before we start and go any further, let's quickly tell you what is lined up in the first half hour of the show. We get you updates from markets across the globe. Dean Kim of William O'Neill and Company will join us to discuss the global setup. Later, our research team will get you CNBC TV18's list of top 10 stocks for the day. At about 8:30, we do a fundamental stock analysis. Aditya Suresh of Macquarie joins in for that.
All right, we have a lot of important calls coming through this morning, so let's get straight to it. On the equities front, we have Hiren Ved of Alchemy Capital who says the market is temporarily oversold, though April is expected to be better, but don't expect any runaway bull market as yet. He adds that the market could spend a little more time in consolidation and investors should wait for Q4 earnings and management commentary. They are awaiting details from the technology managements about IT spends before taking a fresh call.
Okay, well, let's get you some money market views. On the rupee, Kunal Sudani of Shinhan Bank says the German annual inflation slowed sharply in March but still remained above forecasts, adding pressure on the ECB to further tighten its monetary policy, which pushed the Euro-USD pair higher and in turn dollar index lower, where 101.6 is an important support. He adds, the US core PCE index data, which is due today, will be crucial for the US dollar bulls. For the rupee, 81.8 to a dollar acts as a support, while 82.35 to a dollar is a resistance.
And also, let's get a view on the bonds. Ajay Magnolia of JM Financial says the announcement of the first half borrowing calendar by the RBI for the next fiscal is as per market expectations and is a balanced one across maturity buckets ranging from 3 to 40 years and shall be a comforting factor. It does match the demand dynamics across the curve and yields may remain in positive territory today despite tighter liquidity. As it's the last day of the financial year, there could be a last moment buying from long-term investors to rebalance portfolios. He expects the 10-year benchmark yield to trade in a range of 7.26 to 7.32%.
All right, we have plenty of stocks that we're tracking for you, and we'll get to the stock-specific action in just a bit in our special Top 10 segment, but we're looking at Reliance Industries, Oro Pharma, Cipla, Bharat Electronics. You have JSW Energy, Tata Power, Jain Irrigation Systems, and Maharashtra Seamless. They'll all be reacting to positive news flow in the last 48 hours or so, while you have Lupin and Max Financial. They are stocks that will be reacting to negative news flow.
All right, those are views coming in. Dean Kim, head of global research product at William O'Neill, is joining us now to take some questions. Dean, good to have you with us here. Thank you very much for your time. Risk sentiment is on the mend, clearly, and we are wrapping up this week in much better shape and form. And there is no news flow, bad news flow hitting us. Are we set up for a bit of a rally globally, in your opinion? Equities, Dean?
Well, I mean, for the U.S., we put the market back to uptrend. We had a follow-through day yesterday on the NASDAQ. The S&P has yet to follow through, but we're considering both markets to be an uptrend. But I would say the breadth is still a bit narrow. So as an example, we had 85% of New York Stock Exchange above 150-day moving average beginning of February, but now we're sitting at around 37%. And in terms of sectors, semis and software, they're holding up quite well, and some cap equipment as well. But financials, transportation, retail, they're struggling at the moment. So it's a classic case of cyclical sectors not doing so well at the moment. Perhaps the money's flowing into areas like semis and software, where we have some tailwinds. We see some big catalysts coming, such as AI, chat GPT driven services that are about to come on. So the market is holding up quite well. Both indices are above moving averages. So as an example for NASDAQ, we're looking at next resistance at around 12,300 with support only 2% away at the rising 10-day moving average. For the S&P, we're looking at support at around 50-day moving average, which is 1% below, with resistance at around 4,100. So we're hopeful that this follow-through is going to stick with us. But then, we have to be mindful of data that's coming out. So, for example, next week, we're going to see payroll data coming out, and the week after that is a CPI. So depending on what the data shows us, I think the market's going to react according to that.
Okay, got that. So you are a bit optimistic on the market overall, but what about India, Dean? Because this morning we've woken up to a big upgrade that came in from Morgan Stanley on the Indian markets, and they say that the valuation premium is now narrowing, so it's looking like a good time to buy since India is very resilient as well. What are you seeing on the charts, on the Nifty? Do you think the worst of the fall is behind us? And what does the trajectory look like here on?
Yeah, I think the Indian market has a bit of work to do, trading below the 200-day moving average. But when I look at the rest of Asian markets, for example, Hong Kong, we put Hong Kong into uptrend a couple of days ago. Taiwan is still doing well. Korea is over 200-day moving average. So we're heading in the right direction. So for when I look at sensex, I think the next support is only 1% away at 57,000. And resistance obviously is at the 200-day moving average, but that's only 2% away. So I think if we can get over that 200-day moving average, you're going to see breadth, broadening out. When I look at the data, I think it's only about 35% that's trading above 200-day moving average at the moment, where it was more like 65% a couple of months ago. And when I look at the stocks that are kind of breaking out in India, it's concentrated towards cap equipment, building materials, and maybe a couple of names in retail. But that's about it. But we would like to see more stocks breaking out, and we'll probably get that if the index can, get over the 200-day moving average.
All right. Hi, Dean. Good morning. But Dean, if you're allocating money to some of these Asian markets, does India feature at the top? Because you're mentioning, the Hong Kong market, the Korean market, they're looking good as well. So incremental money goes to India or it goes to other markets? And also in the past, you've spoken about a couple of banks here in India, ITC as well. A couple of stocks that you all would have been buying in the last month or so?
Yeah, I think India still is a fantastic place to invest, because when you look at it fundamentally, GDP growth is still outpacing the rest of the world. So even, it's been revised downwards for fiscal year 24. You're still looking at above 5.5% GDP growth. And I still would say, in terms of financial stock setup, the penetration of household loans is still very low. So banks are still going to grow 20% organically. You just don't see that in the rest of the world. So I think it's a fantastic market to look for opportunities. But we're mindful of the index where it's sitting. So let's make sure if we can get over resistance, then I think you'll find a lot of ideas coming through.
Okay, so India is a fantastic market to invest into. Just a follow-up here, between the large sectors, whether it is banking or IT, where do you see the maximum potential? You said this is a great market to look for opportunities. Where do the opportunities lie?
Yeah, we're still keeping a very close eye on the banks. So, HDFC, you have banks like federal banks, even State Bank of India, very, very good setup. It's sort of consolidating at the moment, and that's okay, because as soon as I think, the US kind of settles, and Fed is done with rate hikes and we see the economy kind of settling down, I think that's going to allay a lot of global fears. And that's when I think the Indian financials are going to start to react. And so we're definitely keeping an eye on the financial stocks. A couple of smaller stocks that are kind of popping up, stocks like Equitas Small Finance. So you have some of these smaller consumer finance type companies holding up really well, and we're looking for them to break out. So a lot of good ideas there.
All right, Dean, we leave it at that. On that optimistic note, thanks a lot for joining in and speaking to us. That's William O'Neill saying that this is a great time to be investing in a market like India. They have their eye firmly on the financial stocks, and they do like a lot of stocks. He mentioned names like HDFC Bank, Federal Bank, State Bank of India feature on his list. In fact, a lot of positive opinion coming through on India this morning. There's an upgrade from Morgan Stanley. Morgan Stanley has upgraded India to an equal weight given the narrowing valuation premium and a resilient economy. They are bullish on India's structural growth outlook driven by a digital infrastructure empowered lending boom, demographics, domestic demand and improving FDI. They have upgraded India and they have a focus now on financials as well as consumer discretionary sectors. Well, on that note, let's slip into a quick break. Lots more opinion coming up, and we'll also drill it down to individual stocks. Our entire research team will be with us to help us with a list of top 10 stocks as we begin a brand new day of trade.
Welcome back. Hope you're having a good morning. The SGX Nifty is suggesting that we'll likely start off well in the green. But as promised, let's get straight to our top 10 stocks that we're tracking for you. Our research team is standing by with CNBC-TV18 top stocks for the day. Sonia, you go first. You're looking at Reliance Industries.
Oh yes, this news is known, but now the company has initiated the process of the demerger of its financial services arm. Remember, it had announced last year that it will be demerging its financial services business in order to unlock value for shareholders. So that's a positive that's coming through. The financial services business will be renamed Geo Financial Services, and 2nd of May is when the board meeting will take place, where stakeholders will meet in order to discuss more about the demerger plans. Now, after the demerger, the shares of Geo Financial Services will be listed on NSE and BSE, and shareholders will get 1 share in the new demerged entity for every share that they hold in Reliance Industries. Now, if you look at it, the financial services business, the combined entity has a revenue of around 1,530 odd crores and an asset base of almost 28,000 crores. So it's a pretty large business. And last year, when they had made this announcement, a lot of brokerages had written notes. They have a positive view on it because A, it unlocks value for shareholders. B, the business is pretty large and growing as well. MK put out a note where they said it sets the stage for monetization of many of its verticals, which is a big positive. So I'm going with a green on Reliance Industries.
Right. So that's a big one, right? Reliance and focus. We'll keep discussing this with analysts a little later on the show as well. Now, Pharma has got news flow. Ekta is here to tell us more what stocks. Ekta, morning.
Morning. Well, I'll start with Lupin, which is in focus. I expect the stock to be in the red today because they've been issued a Form 483 for their Pithampur Unit 2 with 10 observations. So the number of observations would obviously deter the street in terms of what could happen for this particular plant. Remember, this particular plant already has a warning letter which was issued to it in November 2017. So maybe the resolution of it is going to be pushed back further. Now, we don't know what the observations are, but nonetheless, the number will probably deter the street a little bit. Aurobindo and Cipla, marginal positive, should add sentiment to the stocks. They have signed a voluntary sub-licensing agreement with the Medicines Patent Pool for an HIV drug. So they will be manufacturing it for 90 low and middle income countries, including India. So it's largely going to add to their ARV portfolios, which is their antiretroviral or anti-HIV portfolios. Plus, it is the first time a longer acting injectable drug for HIV has been made via has been made available via the MPP for low and middle income countries. So that should probably add in terms of sentiment. Will it be a huge game changer? Unlikely. Add to sentiment? Yes.
Okay, all right. Thanks a lot for that, Ekta. Well, Vivek joins us as well to tell us about some more stocks and the news. Vivek?
Well, good morning. Some stocks on the radar on the back of, news flow. First on the list is defense company Bharat Electronics. Some important, order wins coming in for the company. The Ministry of Defense, number one, has signed 10 contracts with the company, and this is for orders worth almost 5,500 crore. This is again for the Indian Armed Forces. An additional order win was, uploaded by the company to the exchanges for almost 2,700 crore. Once again, this is for helicopter manufacturing as far as the Indian Armed Forces is concerned. Jeffrey says that at this point, the recent ordering brings it much closer to the FY23 estimated guidance of close to 20,000 crore, and they believe that stock is now at a good entry point. Watch out for JSW Energy as well. Along expected lines in terms of timelines as well as the actual news flow, the company has gone ahead and completed the acquisition of the renewable energy portfolio of Mitra Energy. Now, this acquisition adds a total installed capacity of over 17,500 megawatts, and the assets have an average PPA of close to 17 years. Lastly, Tata Power, some news flow coming in for the stock. Number one, under the PLI scheme, the company plans to set up almost 4 gigawatts of solar cell and modules manufacturing unit in Tamil Nadu. Also has received a letter of award for close to 1,755 crore to set up a solar project for NLC in Rajasthan. And lastly, the board has gone ahead and reappointed Praveer Sinha as the MD and CEO for further 4 years.
Okay, very helpful there. Thanks a lot. That's a pretty much exhaustive list of a lot of stocks in focus. But Surbhi, my colleague, has some more stocks in the news. Surbhi, over to you.
Thanks for that. So first up on my radar is Max Financial, where the promoter Max Ventures has sold 30 lakh shares, which is close to 0.9% stake in the company. Now, as of December 22 shareholding, the company holds 11.3% stake in the company. Of these 30 lakh shares, 20 lakh shares were bought by Plutus Wealth Management. Next is Gen Irrigation, where the company has announced that it has completed the merger of its global irrigation business with Rivulus. Now, this merger was announced in June of last year in a cash and a stock deal, and the company says that all the regulatory approvals related to the merger has been received by both the entities. Now, post this merger, Gen Israel, the subsidiary of Gen International, will continue to hold minority stake of 18.7% in the company. The merger will help reduce the company's consolidated debt by 44%. So, the 6,400 crores of debt will be reduced to 3,615 crores. Also, the company will release a corporate guarantee worth 246 crores. And lastly, Maharashtra Seamless, the company has received an order from ONGC Limited worth 537 crores to supply seamless casing pipes. These pipes have to be supplied in various states, including Maharashtra, Gujarat, Rajasthan, West Bengal. And these pipes will be gradually dispatched over the next 46 weeks.
Thanks a lot for that, Surbhi. Well, here's a quick recap of all the top stocks that we'll be tracking. Stocks with positive news flow include Reliance Industries, Oro Pharma, Cipla, BEL, JSW Energy, Tata Power, Jain Irrigation Systems, as well as Maharashtra Seamless. While only a couple of stocks that could be reacting to negative news flow, namely Lupin, as well as Max Financial.
All right, well, those are all the stocks in focus. But let's also get a roundup of what's happening in the world of crude. In fact, Brent is now above $79 a barrel, so getting back on its feet. Manisha Gupta is joining in this morning to give us all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, at 79 and a 3-week highs is where we are trading the crude oil prices, with nearly 5% of gains in this week itself. Well, the markets are supported by lower U.S. inventories. We have seen the inventories decline by 7.5 million barrels in the previous week. So the U.S. inventories now stand at a 2-year lows, and that is supportive. Also, the gasoline inventories have declined, and this is ahead of the U.S. summer driving demand season. So the markets are taking cues from that. Also, there is halt in exports from Iraq, Kurdistan. Russian output has seen a cut as well. And then PetroChina says that the refined oil consumption in China will grow by nearly 3% in this year from the pre-COVID levels. So everywhere that you see, there is some supportive fundamental coming in for crude oil prices, which has been supportive. Not just that, if you look at gold, that's trading at a 12-month high, silver at a 11-week high, copper prices at a 3-week high. So you are looking at many of these industrial as well as precious metal prices trade firm today.
All right, Manisha, thanks very much for that. Commodities in focus as we start another session. We'll take a quick break here. Up next, Aditya Suresh of Macquarie will join in for some fundamental stock talk. Later, we will connect with Sandeep Parekh and Hetal Dalal to talk about the various measures which have been approved by the SEBI. The board meet day before yesterday. And of course, a lot on the annual there as well. Stay tuned, all of that coming up.
Welcome back. Well, hope you're having a good morning. Our markets are set to kickstart a new series today. That's the April series, and also it's the final day of this fiscal. So let's see how that plays out. To help us out to analyze various sectors and how markets are shaping up, Aditya Suresh, Head India Research and Strategy at Macquarie, joins us on the show. Hi, Aditya. Good morning. Thanks so much for joining in. Well, Aditya, when we spoke a month or so ago, you were telling us you're fairly cautious on the Indian markets. And I think you were factoring in an 8 to around 10% correction in the markets. Well, we've got a few percentage points actually. But going by when we spoke and that, and just deducting 8 to 10%, my guess is that you were factoring in a better entry level for the Indian markets around 16,000, 16,200. How would you view the Indian markets at around the 17,000 odd mark?
Good morning. So I think it's the same position, right? So at the start of the year, we were saying we end down about, say, 10% thereabouts. We're along that path. Today at 17,000, we still think that there is a cautious kind of stance to be, which is warranted. We're still maintaining that. We still think that from an earnings perspective, there are cuts to work through. Domestic flows, foreign flows, still not as supportive. So maintain that cautious stance here, Nigel.
Aditya, so at an institutional broker, you will not have, you won't cover smaller names. You've minimum kind of criteria, etc., liquidity and market cap, and so on and so forth. But I was looking at, companies with market caps of over 1,000 crores of this year so far. 75% of that universe is actually down. About almost 25% of that universe, actually more, is down more than 20%. So the broader markets have taken a fair bit of a beating, right? Even as the Nifty has not lost that much. It's down 7-8%. So, I mean, do you look at these larger measures as well to understand where sentiment is and how beaten up that is? And what implications does that have for future prospects?
Prashant, I think all these are really important considerations, right? And in terms of how we're thinking about within our own coverage as well, it's not to say that we prefer large caps, small caps in a kind of broad brush sense, but we're thinking about kind of what growth is already kind of built into some of these stocks. And in some cases, we've actually gone ahead and upgraded some of our small mid caps, which we where we thought kind of the valuations had pulled back to more reasonable kind of levels, right? So it is being selective, and I would say that in terms of some of these growth expectations kind of being built into numbers, they're becoming a bit more realistic. In a broader market sense, Prashant, if you're looking at kind of India kind of pricing in say 15% 2-year forward EPS growth, I still think that there are cuts to kind of work through, and to that extent, we're still in that kind of cautious camp.
Okay, so when you say that you are optimistic on certain small and mid caps and you've upgraded them, can you help us with some sectors, some stocks that you like, where valuations are now looking reasonable and there is perhaps growth potential as well?
Yeah, so I'll avoid the stocks, but like for example, in the energy space, there are a few names which are in that value camp, which I think are interesting. Even in some of the new age names, there we think valuations are kind of become a bit more attractive at these levels. Still not outright buys, but in terms of the growth being priced in, as I said, that is kind of it's more in sync, right? So some of these new age names we're becoming at the margin a bit more constructive in the energy space. That's an area where I think there's inherently a lot of value, and the stocks have meaningfully kind of pulled back.
So when you talk about the energy space, what are your thoughts also on this PNGRB notifying this unified tariff order for the gas transmission network? Any thoughts on what the impact this would have on the industry, the oil and gas space, and any specific pockets that you'd like?
So I think this is incredibly positive for the midstream gas companies, right? And so thinking about the largest kind of midstream company, which is trading at, I'd say, 5 times PE, the impact on earnings is substantial because what you're really having is that the tariff in itself, for example, for GAIL, which is at say 43, 44 rupees, there is meaningful upside here to that tariff number based on this unified tariff order. So I think that's really constructive here for earnings for the midstream, which therefore I think should help with the capacity expansion plans for the industry. And India clearly has this big kind of ambition to expand gas pipeline capacity, increase gas proportion in the energy mix, and all this is a positive step in that direction.
So for these companies, right, whether it's a GAIL, a GSPL, Gujarat Gas, even something like an ONGC, would you scale up your earnings estimate? I mean, you spoke about how it's positive on the whole for the sector, but would you scale up your earnings estimates based on this news flow? And if yes, for which companies would you do that?
So GAIL in particular stands to benefit the most in terms of earnings upgrades. And the impact of this higher tariff is fairly substantial on GAIL's pipeline earnings. So that's the one in particular to kind of focus on in terms of earnings upgrades.
Okay. All right. You know what? We'll come back to you for more. Aditya, we have many more questions for you on individual stocks, sectors, etc. But we also got a lot from SEBI's board meeting on Wednesday. So let's talk just a little bit about that. The regulator has made it mandatory for listed companies to clarify on all market rumors, which is great for stakeholders, shareholders, etc. The top 100 companies must verify, deny, confirm or clarify on rumors from October of this year. SEBI has also emphasized the responsibility of asset management companies to protect investor interests. Sandeep Parekh, Managing Partner at FinSec Law Advisors, and Hetal Dalal, President and COO at IIAS, joins us now to talk about that. Gentlemen, morning to both of you. Lady and gentlemen, morning to both of you. Sandeep, I want to start with you first. Of course, all of this is done in the interest of the investor and the shareholder. But tell us a little bit about what the key takeaways were for you, both from a company perspective as well as from an investor standpoint.
Hi, thanks for having me here. So I'll be quick on the two kind of specific questions that you asked, because the board meeting was, of course, as you know, it discussed a lot of things, more than a dozen things, really. So, first of all, I think, the broad investor interest has been kept in mind for sure. I think the only question is, does it become very costly to really kind of comply with the norms? And, I'll give you the answer to your first question in terms of every time there's a rumor now, so they've limited to mainstream media. So it will probably be Economic Times, CNBC and the likes, and not every time somebody posts on Twitter. Every time there's a rumor which is inaccurate or kind of sometimes mischievous, a company would be obliged to kind of come out with clarification. So I think it would certainly impose a cost on companies which have to now track a lot of events happening in the media rather than in the real world. And as you know, many times there are just rumors, and if they to quash every single rumor which crops up, it could impose some kind of some distraction from real work. But I think it's a manageable cost. So that's okay.
True.
In terms of mutual funds,
I just wanted to get Hetal into this conversation as well, just on the point that you made, because Hetal, that seems to be the problem, right? It's fine, it looks okay on paper, but it seems to be a bit impractical. There is perhaps a cost involved. How easy will be the implementation of this? You can't be quashing every single rumor that comes out, especially in this digital age. How do you track it? Your thoughts?
I think this is a tricky one, and it's been hotly debated when the consultation paper also came out. I think by and large, the intent is correct in terms of saying that there are rumors and therefore there needs to be more clarity in the market, and you ensure that there is no price run or drop just because of rumors. The challenges are, if you look at it, there are three players in this entire argument. One is the stakeholders, the other is the company, and the third is the media. Now, let's take a simple argument of a company simply saying that someone puts out, and there are several examples of this, that a media report sort of comes out saying the company is going to acquire another company, or there is a transaction which has happened. Now, the transaction is a stage of negotiation. The company actually cannot confirm nor deny. So this becomes a bit of a tricky spot in terms of saying that what does the company therefore do and how does it address this particular rumor. I think the other piece, when you look at media, right? Media it's very easy now for media to be mischievous if it wants to be. So let's say the transaction is happening at 1,200 rupees for the sake of argument. Media is a rumor. Media puts out a number, now the company has to confirm or deny whether the price is going to be 1,200. So it can be easily manipulated. I think we need to see how this, and for investors, of course, there's great clarity because now you know whether it's actually happening or not happening, whether it's going to be higher or lower. But I think the implementation is likely to be tricky. I think the intent is right. We'll have to see how this plays out over a period of time and then sort of address, the nuances. But by and large, what it also therefore tries to sort of force is better stringency around how this data is getting leaked. So all parties to a transaction, for example, will have to therefore be extremely careful about information and security. And I think these are things which will drive greater and stronger processes within the system. But like I said, there are pitfalls, and I think we'll have to see how it plays out. But by and large, the intent is right.
There is a mechanism. Morning, Hetal. Morning, Sandeep. There is a mechanism now, right? Whenever there is a news item, and the price moves significantly, exchanges ask companies for a clarification, and then the companies respond. Sandeep. So this is over and above that?
Yeah, this is over and above that. So this is, let's say, it says that a listed company A is seeking to acquire company B. It will create some of the issues which Hetal mentioned, which is very important because, when it's at a negotiation stage, if you disclose it, what will happen is, the target company B, the price is going to move up by, let's say, 20%. And then it may make the entire transaction unviable because the company can say, it can say either no comments, which I don't know if SEBI is okay with that. But if it affirms it, then, the price goes up and the transaction fails. And they can't deny because, ultimately, that would be lying and that's not allowed under law. So, I mean, it will create a lot of tricky situations. But it's certainly above and beyond what is required under currently, and it's above and beyond what is required globally. I don't think any other jurisdiction that I know of actually does something like that.
Okay, this is the most hotly debated item, but as you said, Sandeep, it was a long board meet. Lots of things happened in the press conference. I mean, the chairperson answered questions patiently and over a period of time on so many issues. And we want to discuss 2 or 3 more things. Sandeep, on the issue of ABSA-like model for secondary markets, right? So basically money moves, money from your bank account moves directly once the trade is completed. It doesn't lie with the broker. I just want your thoughts on that. What will this do to the business models of, large brokers? A lot of them depend on the float, really, to make their money. Because the brokerage is, of course, next to nothing. I'm talking about companies like Zerodha, etc. Go on. Your thoughts?
Yeah. No, so I think it will certainly impact many of the large brokers. It may not impact somebody like Zerodha too much, but it will impact the companies which are kind of a lot more dependent on the float. They'll have to just relook at the business model because this is what has come in. And, where this is coming from is quite different. It's not so much to do with saving, 2 days interest cost of investors. It's really coming from all the, scams, including Carvey. And, the law has been clear since 1993 that you can't commingle one client assets with another. You can't commingle your own funds and securities with another. So, they just, I think they've really not been able to, we've had so many incidents despite that. And therefore, I think this is kind of, they thought this is the only way to really prevent mischief and fraud.
Okay. There's another issue, right? On the mutual fund total expense ratio, there were certain announcements that came through where they said that brokerages paid by the mutual funds to be kept outside the total expense ratio. They do not appreciate double charging of unit holders. Hetal, I wanted your thoughts on this. How strong does SEBI's intent look? And does this eventually mean that the total expense ratio is going to be brought down further?
I think, look, unfortunately, this is not within my remit to answer, so I'll pass this to Sandeep.
Okay, Sandeep, you want to take that?
Yeah, so I think the way things have moved over the past 2 years, there has always been a pressure in terms of a downward pressure, regulatory downward pressure on total expense ratios. In what forms and which how it comes, it's been coming from multiple areas. It started with around 2 years back. They said that competitive markets are not kind of working out well because despite kind of the kind of the competition that you have in, let's say, large cap schemes, the kind of fees that are being charged are not kind of going down. So they looked at the data and they said, look, we're going to reduce the cap. Then they looked at caps in terms of the tier 2 cities. Then they looked at multiple. So I think this will continuously keep progressing. And I broadly, I don't think it's a big issue for the simple reason, we've gone like almost 6x in terms of the fund size for mutual funds over the past 15 years. So whatever they've kind of lost in terms of the expense percentage, they've more than made up in terms of, being well regulated, being kind of, all the benefits that we've seen from mutual fund. And of course, there will be challenges, not just with TR, as you mentioned, but also the tax challenges in the debt fund. So all these things are a given, but I'm still kind of reasonably optimistic about this industry.
Hetal, very briefly, your thoughts on the measure to put an end to permanent board memberships. That is right in your coverage area or subjects that you look at very closely. What universe of companies will this impact and in what way? Briefly.
So look, we wrote a paper about this in August 2022, and even when we looked at modifying our corporate governance score assessments, we had essentially said that this is something that we don't like. It actually impacts, in most instances, it impacts promoter-controlled companies, which is essentially 2/3 of listed India. Permanency of both these typically happens in two ways. One is where the promoter essentially embeds himself or herself in the articles of association. So a classic example is Dr. Vijay Mallya in USL, right, where despite Diageo having majority equity, he was embedded in the AOA to say he will remain chairperson given a certain very low shareholding threshold. As a result of which, he refused to exit and he had a legal right to stay on the board. This is something we see periodically. There are several more examples where in the AOA, the promoters have actually embedded themselves. The other way is to say that I'm going to get appointed, but I won't be liable to retire by rotation. So essentially, that means if I'm in a non-executive capacity, once I get appointed on the board, I just cannot be removed because I won't come to shareholders for another and that gives you another board permanency structure. And the third is where you see in the newer startups that you're seeing, right, where founders not classified as promoters and some private equity, pre-IPO private equity investors have embedded themselves into the AOA with extremely low shareholding thresholds, or to say that if they remain in executive capacity, they will always be on the board. So therefore, it's essentially resulting in entrenchment. Now, you would argue that it cuts both ways. Investors like the fact that promoters have skin in the game. They're going to be there for a longer period of time. They will see the company through. But what happens is really when the performance starts deteriorating, there are financial leakages, there are concerns over governance, it becomes far more difficult for the stakeholders to therefore be able to effect change if the board is also going to be hand in glove with the entire process. And therefore, to say that, so therefore SEBI has done two things, right? One is to say that board permanency is no longer going to be allowed and all directors have to come up for approval every periodically. And the other is to say that special rights will also be sort of come back to shareholders for now. So this essentially, one, allows shareholders to vote on the board permanency or vote on shareholders periodically. And second is it also essentially allows promoters to be in the driving seat as long as they have shareholding.
Got it. Hetal and I mean, you know, both of you, Sandeep, Hetal, this is a great conversation, and unfortunately we've run out of time, but we will definitely take it up later through the course of the week as well. Thanks a lot for joining in. Let's slip into a quick break. On the other side of the break, let me tell you what's lined up. We have the top stock picks for the day from our technical and F&O experts. Later, we'll decode the stock rally with our Momentumizer segment. Before the market opens in CNBC-TV18 stock board, we will highlight the top stocks in the news to focus on for the day. Stay with us.
Okay, welcome back. Just about 6 minutes to go for the pre-open session, and we'll have rates starting to come through. And it's going to be an interesting one, given that we are coming back with 2 days of positive returns in global markets. Things have underperformed the globe quite a bit, and we're starting to see the first signs of life in the broader market as well. Aditya Suresh from Macquarie is still with us. Aditya, thank you very much for waiting, and while we were on that other discussion. Just wanted your thoughts on any of these. I mean, if you have coverage on stocks like Bharat Electronics, I mean, the defense names. In the case of BEL, as our research analyst just pointed out a while back, there's been a flurry of orders in the last couple of days, which basically means that, what they guided for, taking in orders, that number has been exceeded with the orders starting to come through. I don't know if you have coverage on that stock. If you do, any thoughts? Go on.
Prashant, we don't cover that name, so I'll give that a pass. But as a broader theme, if when we're looking at the industrials spaces as a category, we are constructive. And one of the themes there is just about whether it be the government spending, the strength of the order backlogs, execution of the said backlogs, the margin expansion story. So it does kind of broadly fit into that theme where industrials on its as a category, we are seeing kind of strong growth over the next 2 years. That's an area of interest, and that's kind of an area where we like and we'll be positioned.
All right. Thanks a lot, Aditya, and thanks for waiting by patiently as well. Appreciate your thoughts. That's Macquarie with their views on the market and individual sectors. Let's slip into a quick break. On the other side, we have the pre-opening rates. We'll also have with us Shrikant Chauhan and Kush Bora for some technical trades. After that, Karan Taurani of Elara Capital will join in to discuss the Z Indocin settlement, and the merger is now back on track. So more on that in a bit.